Thank you for staying tuned. Airtel Africa, a subsidiary of India's Bharti Airtel Limited, says it will proceed with its plans to list shares on the main market of the London Stock Exchange through an initial public offering. The company said the offer is targeted to raise $750 million and proceeds will be used to reduce debt. BK Group PLC, the holding company of the Bank of Kigali, has reported a 23.4% annual growth in its net income earnings, some $8.3 million in the first quarter of 2019. In a report published today, the new investment powerhouse posted the impressive results across its 4 subsidiaries, including the group's latest addition, BK Capital. The BK Group PLC reported a return on equity of 15.2%, while its return on assets stood at 3.3% in the first 3 months of the year. Total assets also increased by 20.2% into $1 billion, making it Rwanda's first billion-dollar company. The group's chief executive, Diane Karusisi, says the first quarter results came on the back of innovative products, cost reduction by 9.7%, and improved digital efficiencies. And South African grocer ShopRite has terminated an agreement to buy back deferred shares held by its chairman, Christo Ways, after failing to secure enough support from shareholders to back the move. The deal, which would have significantly curbed Ways' influence in the company he helped turn into an African powerhouse, had aimed to simplify the firm's voting structure. ShopRite Holdings received written notifications from more than 15% of other shareholders, indicating that they will not vote in favor of the special resolutions. ShopRite's capital structure includes ordinary shares and deferred shares, which carry about 32.3% of its voting rights. The deferred shares are held by Ways' investment vehicle, Tybalt Square Financial Services Proprietary Limited. And the International Monetary Fund says South Africa's subdued economic growth could be reignited if the implementation of structural reforms, including a troubled state power utility Eskom, is accelerated. The fund says following President Cyril Ramaphosa's re-election last month, a focus on policy actions to remove long-standing constraints to growth and accelerate job creation is a must. According to the fund, Eskom will require bold action to redefine its business model so that it becomes self-sustained and ensures affordable and reliable electricity supply, and says postponing the needed adjustment of the entity will only force greater difficulties down the road. Meanwhile, in Zimbabwe, the International Monetary Fund says foreign loans that use minerals as collateral may complicate the country's future negotiations with foreign creditors to restructure its $8.8 billion debt. Unable to get funding from lenders like the IMF since defaulting on its debt in 1999, Zimbabwe has, over the last 5 years, relied on the Africa Export and Import Bank for mineral-backed loans, but the country still faces a dollar crunch that has led to shortages of fuel and medicines. Zimbabwe remains in debt distress. Its $2.6 billion arrears to the World Bank, African Development Bank, and European Investment Bank prevent access to new funds from multilateral lenders. IMF says Zimbabwe's projections of economic growth would probably be revised in the short term because of drought and a cyclone that battered the eastern regions. The IMF forecasts the economy will shrink by 2.1% this year. And Kenya's Central Bank Governor Patrick Njoroge says the country needs to urgently stamp out an upsurge of suspicious transactions in its financial sector that endangers future commercial activities and economic growth. The East African nation is favored by foreign investors mainly due to its diverse, fast-growing economy, but its reputation has long been tainted by widespread graft and weak application of anti-money laundering laws. The government had decided to deal with the problem quickly and conclusively, with the first step being the planned invalidation of the older version of its 1,000 shillings note. According to him, the central bank has not quantified the volume of illicit flows, but there had been enough evidence to force the authorities to act. And 2 federal agencies, the Nigeria Export-Import Bank and the Nigeria Inland Waterways Authorities, have signed a partnership that will enhance intra-Africa trade, especially within the West African region. The managing director of Nexim Bank, Abba Bello, says the agreement will enhance easy trade in Nigeria and increase trade flows in line with President Buhari's administration's objective of diversifying the economy from oil and deepening the non-oil sector.
The MOU partnership is intended to bridge infrastructure gap that will promote and enhance trade connectivity as well as all Nigeria's regional and global trade competitiveness. The MOU is no doubt a significant milestone in our ongoing collaborations with all key national and regional maritime shareholders and will be catalytic to the realization of one of the priority projects under the ECOWAS Community Development Programs. Distinguished ladies and gentlemen, it will interest you to note that Nexim's strategic interest in partnership for the promotion of regional sea link dates back to 2011. Nexim's decision was largely informed by the huge logistic challenges and non-tariff measures along the ECOWAS trade corridor. This, coupled with the desire to both enhance Nigeria's export to the ECOWAS, that has muted over the years at just below or at 15%. And this is to encourage formal trade. It is in this quest to facilitate the realization of the above strategic objectives that the bank introduced the ECOWAS Trade Support Facility, ETSF, that was specifically designed to also achieve the following intra-regional trade and development objectives. A, increasing Nigeria's trade flow within the ECOWAS sub-region, especially trade in manufactured goods, to broaden the national export basket. B, facilitating formal and recorded trade within the sub-region and promoting exports by small traders and MSMEs, thereby integrating them into the formal economy. C, deepening the current payment system and trade instruments. As the Trade Policy Bank of Nigeria, Nexim's strategic interest and partnership in the regional sea link project is to promote and diversify exports, as well as enhance trade connectivity in line with the government's objectives to diversify the economy. Also, the bridging of maritime infrastructure gap is expected to significantly enhance exports of both solid minerals, thereby enhancing the GDP group contribution of both shipping and solid mineral sectors from the current levels of about 0.2%. The effective implementation of the sea link project and the safe utilization of the inland waterways would no doubt bridge logistic gaps that will attract and facilitate investment flows into the two sectors. This will contribute to the realization of one of the broad objectives of the ERGP, which is building a global competitive economy. To this end, it will also contribute to improving Nigeria's current World Bank Ease of Doing Business and Logistics Performance Index. In value terms, it is projected that the signing of this MOU will promote waterway operations to the hinterland, transit and coastal trade, especially for bulk cargo. It is noteworthy to highlight that it is projected that this development will enhance non-oil exports revenue to between $500 million to $1.2 billion.
Abba Bello, Managing Director, Nexim Bank. And on that note, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimezie Obi Iwawu.